On board Pramod Patwari, the CFO at Balrampur Chini, on the kind of trends that they're observing when it comes to the sugar industry. Good morning, Mr. Patwari. Let's understand first of all how there's a transformation, underway at the company currently, and what the management is really attempting here.
Good morning. At the company level, you must have realized that in the year 2016, we began with a mission of lightening our balance sheet with prepayment of long-term loans. That is more or less over, and whatever long-term loans are there in the books, all these loans are carrying a very low rate of interest. So currently, we are in the mission of lightening the balance sheet further by reducing our inventory. In the last year, we exported aggressively 3.1 lakh tons of sugar. We are also diverting sugar aggressively in the B-heavy route ethanol production. Thereby, we are also reducing the level of inventory into the sugar.
How's your revenue pie likely to change as well in the next few years? How much can the distillery get from the current 10%? Because the management in its annual report has talked about how this business could really be a game changer going forward. And both alcohol, ethanol prospects are looking good.
Yeah, currently we are at around 9 to 10% of revenue in terms of ethanol. That is expected to go up to 19 to 20% in a year's time from here on. So going forward, the revenue composition will significantly move from sugar to non-sugar. That is mainly distillery.
That's interesting. Pramod, if you could just dig deeper into that, because, like you're rightly saying, and the market as well has been now perceiving you more as an agri company going into the future. And, more than just a sugar company, really, which is actually a commodity business and very cyclical in nature. So what exactly is the plan going forward?
The tag of cyclicality is gradually coming down in view of the various policies taken by the government, which are sustainable in nature in last 3-4 years. We have also seen the rationality in the matter of cane price declaration by the government. And currently the industry level supply of ethanol is around 1.2 billion liters, 1.9 billion liters. And the way the central government is propagating the development or the installation of capacity addition in ethanol, in our view, this 1.9 can easily go down to 2.9 in years' time, and going forward, maybe 5 billion to 10 billion liters by 2030.
Okay. Something that's going to take you far is being asset light. Help us understand what exactly are the debt reduction plans that you've chalked out for yourself.
In the last year also, we have reduced our total debt to the extent of around 300 crores. So as we have been generating good amount of cash profits for last couple of years, even after distributing a good portion towards to shareholders in the form of buyback and dividends, we were able to reduce our debt. Going forward, our strategy would continue in that fashion. We are further expecting to reduce our debt by 300 crores in next 1 year.
Okay, 3 buybacks totaling about 450 crores, boosting your ROEs. Are there any more such moves planned?
In fact, after the balance sheet date, we completed 1 more buyback. So it's 4 buyback in last 4 years, coupled with 4 dividends. So altogether, almost 1,000 crores was distributed to the shareholders in last 4 years.
Dalmia also joining in from Mumbai. Right now, there is consolidation happening in every sector, and I would imagine that sugar sector will also see consolidation because a lot of sugar companies have debt, they don't have capacity, and they don't have scale and size. Does it make sense for Balrampur Chini to consider a massive acquisition to acquire capacity? Because if you acquire something, A, you'll get it cheap, B, it'll just add more to your market share.
Yeah, because we are not averse to acquisition opportunity as such. The moment any good assets comes to us, which is clean in nature and which suits our overall thinking, like it has the potential to grow in terms of cane availability and recovery, we will definitely look at it.
How should investors look at a business like sugar? Is it a cost plus business, or it's a business where there is an edge for a company like Balrampur Chini because of your balance sheet?
Definitely, there will be edge for a company like Balrampur. I would say today we are sitting in an environment where inventory is at an all-time high of 14.5 million ton. In spite of that, industry and in particular Balrampur was able to report stupendous numbers. So this kind of numbers was not possible few years back. So I think because of the sustainable policy and the initiative which the Balrampur has taken in terms of lightening in balance sheet and continuously improving the efficiencies and managing in financial resources well, we will continue to outperform the industry.
Could you give me a reasonable assumption 3 years out that what could be your revenue mix from ethanol and sugar, because that is going to evolve and change?
As of now, I have visibility for next 1.5 year, whereby I am seeing a revenue composition around 20% from ethanol. Currently, we are at around 10 to 11%.
If the total contribution from ethanol changes, will that change your aggregate margins?
Yes, definitely.
And by how much?
See, again, this ethanol profitability is also a function of transfer of molasses prices. So I would say that overall profitability from the company point of view should always be seen. It doesn't matter whether it comes from sugar or from ethanol. But having said that, the profitability from the distillery segment will be better than whatever we are having as of now.
The new APMC reforms, even though government has said that look, the MSP is going to continue and sugarcane is somewhere it is going to remain because it's a politically sensitive subject. What is your understanding on the APMC reforms? Will anything change meaningfully?
As far as these reforms are concerned, it is not going to have any impact on the sugar industry as such. We are already under an MSP regime as well as the FRP regime. FRP, which is being declared by the government, is on the basis of recommendation from the Niti Aayog, and which is at present at a premium to the other alternative crops. So this is not going to impact the sugar industry as such.
I go back to that same point once again, perhaps just for the benefit of our viewers. How should one understand the business model of a company like Balrampur Chini? One, there is volatility which will always happen because of international sugar prices, because sugar is a commodity. And on the second side, you've got this ethanol business, which is a high margin, new business line, which is getting added up. So 2 years out, 3 years out, how will things change for Balrampur Chini?
Volatility will significantly come down from here on. Number one. Number two, international prices or the international market of sugar in general do not impact the domestic environment as such, because we operate in an environment where domestic sales are being controlled through release mechanism. We are the largest consumer of sugar in the world. At any point in time, country requires 26 to 27 million ton of sugar for internal consumption. It is only when it is required that India is required to make an export, we are dependent upon the international market. But the way the ethanol policies are coming up, gradually the dependence on exports will also come down. In this context, I would also like to say that Balrampur has already achieved its peak in terms of export discharge, as well as its dependence on government support or incentives in the year gone by. From here on, our dependence on export as well as the government support will gradually come down. So it will be more of a ethanol business. Profitability will come from ethanol business.